Stocks flat. Well, stocks actually slightly lower, but they're recovering a bit. So stocks a bit lower here today. We've got gold lower today. We've got the dollar index up today. You've got silver down, of course, and you've got oil sort of flat. So there's your summary, at least from a high level view of like what's going on. I would like to also just check on the Chinese stock market situation because that's been such a big story. Okay, Chinese stock market's down just under 1%. The volatility is very high on the Chinese stock market the last few weeks, really. But definitely going to be interested to see how unemployment claims impacts the markets this morning. We actually have a dual news of lineup this morning. This morning we've got unemployment claims in about 10 minutes. And we've got, after that, we've got services PMI. So both numbers very, very important to the state of the dollar index, to the state of gold, to the state of the stock market. It's a big day. Tomorrow is also a big day, but today is a big day. Here's gold on the daily chart. Gold is still just sort of teetering around up here. It popped a little higher off of the situation in the Middle East and the escalation we saw a few days back. That's following a big run up in the price of gold. So it didn't quite take us to new highs. And if we're taking a look at the daily chart price action, I would just say we are sort of consolidating at these levels and waiting for today and tomorrow's data points to tell us where the jobs market is at. So earlier I talked about labor market, right? Let's talk about jobs for a second and how it relates to gold. For my gold trading friends, and I know that is a lot of you, here's the synopsis on jobs data for gold. If jobs data is good, if jobs data is bad, let's start with jobs data is bad. If jobs data is bad, what happens? Well, the dollar probably goes down, probably weakens the dollar, and it probably causes a little bit of uncertainty for investors. And that is the perfect combination for potential gold bullishness. Dollar weak, uncertainty in the markets. Gold would then likely move higher. So perhaps on NFP day, if we're seeing, today and tomorrow, strong breakouts to the upside on gold on perhaps weak jobs data, that could be an indicator of potential bullishness above the all-time highs, right? So I actually don't shy away from buying all-time highs if there is a good fundamental and technical setup to trade. So I'll be looking for that. That's a scenario that I could potentially see getting long gold. Now on the flip side, what if jobs data comes in really, really solid? Then we reverse everything I just said. And we said, well, if jobs data is good, the dollar strengthens and stability is reconfirmed in the market. Those two things are bearish for gold. Remember, gold thrives on uncertainty and weaker fiat currencies globally. So if we have good jobs data, the exact opposite scenario could play out. You could see a break to the downside on gold. That being said, there's a sort of weird third variable in this picture, which is geopolitics. So we have what's going on in the Middle East. Unless some sort of resolution or some sort of positive news comes out of there, I think that also limits downside potential for the short term on gold. So even if you get a break to the downside, there's a bit of a premium that traders, investors are willing to pay to perhaps hedge their other bets by owning a little bit of gold in their portfolio. I know a lot of traders love to trade gold, but that's not what most people who have positions in gold are doing. Most people are investing, hedge funds are investing money into gold for one reason or another, but oftentimes it is to hedge geopolitical risk, and it is also to hedge perhaps all allocation being in stocks or bonds. So gold is this third option for a lot of long-term investors. So you have to remember, if the situation improves in the Middle East or something, those people might say, okay, that's gone. Let's go back into stocks. Let's go back into bonds. Let's get out of gold. And if things get worse, they go right back into gold. That's that dynamic. I know that, again, we all focus on trading gold, but the vast majority of actual money being traded on gold is like passive investment, people buying and holding gold or choosing not to. And as traders, we can take advantage of watching that flow.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
No immediate reaction here, at least on the charts front. Let's see what we got. Okay, and that would make sense why. Unemployment claims came out this morning pretty much exactly as expected. We were forecasting 222,000 unemployment claims to come in. What did we get? We got 225. So not a big surprise one way or the other. And this is important to recognize, that when you get news that comes out and it's not very surprising, and that's what the market already kind of expected, that's why the chart doesn't make ginormous moves. You may get some volatility, but nothing huge. So that makes sense. We kind of just go back to default. So that would be a neutral reading. So when we talk about the labor market, we did this earlier. The JOLTS jobs numbers were good. The ADP numbers were good. The unemployment claims numbers, they were fine. They were just neutral. They were fine. So let's scratch that. So that leaves us with, so far, 3 out of 4 events for jobs data this week. I guess you could say 3 out of 5, because tomorrow we get employment data, like employment change, like the number of jobs added, and we also get the unemployment percentage or unemployment rate. So we've still got some data to come. But where we are so far, what the market's trading on today is we've got pretty good jobs data so far. Miko, what are your thoughts on the dollar today?
Yeah, I'm actually liking this because I'm still very bearish on USD, but I'm looking for a bit of strength because I want to see a bit of a pullback. And this is kind of giving me some opportunities on Euro and some other USD pairs. But yeah, it's looking pretty bullish. I've marked out a couple of areas where I think price could get to before maybe reversing. I'm looking at 102.5, and maybe if you have a big move, I'm looking at 104 up there. But I'm really bearish. I'm still looking for us to come back into the low, and just expecting this bullish move here just to be a pullback. So my thinking is, how far will this move go before we do roll over? That's the way I'm going to be looking at it. We're at an area right now which could maybe turn price around. So that could be an area which we do sell off from. I'll keep an eye on that. But I think the big indication will be tomorrow with NFP. But yeah, dollar's pretty strong. I'm looking at this as a pullback. So looking at pairs like Euro USD, I'm looking at opportunities for some buys. I'm looking at 1.1, 1.095. So those are the areas I'm looking to get involved. But yeah, USD strength looking interesting, but I don't think it will last too long.
Okay, yeah, fair enough. And you mentioned the euro with that. So I was pulling up that chart as well, sitting at like a pretty big level of support, right around 1.10. So we'll see if that level does get the same reaction. I imagine it will just be an inverse sort of effect to what the DXY chart does as well. Marco, same thing to you. What are your thoughts on the dollar today? Are you looking at any USD crosses?
Yeah, sure. So let me go through the euro and the US dollar. It's kind of trickling down. These major lows are being broken pretty correctively. So I want to see some momentum either up or down. I'm going to be more patient on the euro and the US dollar. AU is also moving down, a bit more force than the euro and the US dollar, but the legs are just not convincing enough for me personally. I would like to see just a little bit more stronger bearish pressure kick in. Then I would look for sell setups. Pound looks absolutely great. Massive bearish momentum. So a massive bearish leg right here. A bit of a pullback, bit of a pause. Then the bearish momentum continues once again. Major drop. Here on the bottom, seeing some weakness, which is not something I want to see. But if this can continue down, print a nice bearish candle like this, that would be very high probability for me to look for sell setups. So yes, the dollar pairs definitely moving down. Some are trickling, some are moving with a lot of force. It's good to see. We have NFP, so I don't think I will get any entries today. I'm not trading NFP. Maybe NFP can even can create an even bigger moves in the downtrend and show me some nice momentum, so I can get in on Monday.
Yeah, no, that it definitely has the potential. I think with the dollar index sitting where it's at, going into NFP, it makes for an interesting setup. I mean, if you get a very strong labor data point, we could see a breakout that, as Miko mentioned, we could see some of those more extreme levels of resistance come into play. And if that jobs data comes in weak, perhaps this bit of a rally the last few days fizzles out and we head lower. I actually think that it sort of is maybe that binary. Like tomorrow, if you just get, let's just say, a very weak jobs data print, and we get something like this, like let's say the candle tomorrow just closes like that, or perhaps bigger, suddenly, you know, that there's your kind of, Miko, your bearish engulfing potential there. Maybe looking at some other crosses that you like best, see how those charts are lining up. But that could certainly be the case. And then also, if you get a big strong day, the cool thing here when it's like this, where it sets up right at a level of key resistance or support, is that those breakaway moves can a lot of times have some really nice follow through. So we'll see if that plays out tomorrow. Next question for you guys is the metals market. Gold has been just on a tear to the upside this year, just up, like, I think last time I checked, it was like 35 or 30 something percent up for the price of gold this year, which is a huge move. Miko, what are your thoughts on gold or silver?
Yeah, so gold's just more the same, really. It looks like we're going through a bit of a pause, which is probably overdue because we've just been flying for the past few weeks. So it looks like we're going for a bigger pullback, but I'm expecting more of the same. There's no indication in terms of the price action that tells me gold is about to reverse here. So if we do keep kind of sluggishly moving to the downside, I'm expecting a bottom to form pretty soon and the market to keep pushing higher. There's some previous levels which I was looking to catch some break and retest on, around 25.30 and also 25.90. Unfortunately, just gold was too bullish for me to get that retest, but I'm still open for buyers and gold. So should we get there, I'll be looking to step back into the market. But I think a really nice way to trade gold, depending on how you look to get involved with the markets, I think is breakouts, because if gold's going to maintain this momentum, and once it does break out, there's a high chance we just continue. And if you have kind of open targets, you never know how far gold can make on its next move. So I think gold is a really nice market to look for those buy opportunities and just keep taking advantage of that trend until proven otherwise. So movements like that, breakouts of this channel, I'm expecting us to push back into the high and maybe some new highs as well. But yeah, more of the same for gold for now.
I think that sometimes, especially newer traders who may not have experienced like ginormous uptrends or downtrends for a suspended period of time, they look at something like gold and they say like, what do you mean respect the trend? This thing is up so much, why would I want to be a buyer up here? And that's a very common, new trader theory, is like something that's already up, you don't want to buy it. You're going to be the sucker that buys it last. But maybe one thing to think about is like, okay, if you have an upward trend and I hear that concept of like, I don't want to be the last buyer, but like, what if you waited for, as you're talking about, a breakout, and then you set up a trade where if you're right, you stand to gain the next leg of this big uptrend. And if you're wrong, you can keep your risk pretty moderately intact. So that's the theory, is like an uptrend, being afraid to buy into an uptrend or sell into a downtrend because it already feels like it's already made the big move. The danger there is like, you don't realize like you can use stop losses. You can manage your risks so that if that trend does not continue, you can get out of there. But a lot of times the trend does just sort of continue to float and float and float. And, this year, if you've been trying to fight the gold uptrend, that's been a really tough battle to fight. So good points on that. Same thing to you, Marco. Are you looking at gold at all, or what are your thoughts on it?
Yeah, so I just wanted to say, like in Jesse Livermore's book, one of the most successful traders, he said that he's exclusively buying the top when a new breakout happens, because most people are afraid that it's like on the top and that it's just going to go down. And when most people think one thing, well, then the opposite thing happens.
Yeah.
So
That's a good point.
Yeah, this has a lot more upside potential. It's just, it doesn't have any signs of slowing down, especially after this leg of momentum. And this one right here, the momentum just seems to be very bullish. So I would say this trend is more likely to continue than actually reverse down. Again, not seeing any signs of slowing down on this daily chart. Here we had definite signs of slowing down. We had some major bearish pressure in these legs, but again, just compare this stage or this phase of the market with this. This one is much more powerful, much more bullish in my opinion. So just a bullish train on gold currently.
Yeah, and that's the thing is I think that a lot of the, I guess, mistakes that new traders make is oftentimes they see a big uptrend and they see, like, let's say they get long on gold at a good pullback, and it actually does start to go up again. They very quickly take profits because they're like, I can't, I don't want to, be faked out. Like, it's going to reverse, it's going to crash at some point. And the thing is, the longer I trade markets, the more I realize, like, usually if you're sitting there waiting on something to crash, like, it's usually just going to continue. Here's one that maybe not as popular or as exciting of a topic, but just briefly, I want to show you one of the top performing, if not the top performing sector in the S&P 500 this year, which has been, a really pretty good year for the S&P 500. It's actually the utilities world. Now, utilities are like power companies. These are like the really boring, very slow and steady companies. Everyone needs power, everyone needs like water, all that stuff. Well, utilities have just floated higher. And this is, to me, one of the most perfect examples of like a trend can just trend and trend and trend. If you were somebody who thought utilities were going to go down this year, I mean, it's just been like actually the straightest line that I might have ever seen in terms of a uptrend. It's like, it's not, there's, the pullbacks are so minor. So my point is, like, if you catch the right trend and you let it run, if I had put my approach on this would have made my year like into a triple whammy year. Like, this would have been amazing because I could have just trailed and trailed and trailed, and I would have never gotten taken out. And this would have been just a monster mover for me. So my point was showing you that is that, you guys are well aware, but for the audience, sometimes a trend can just outlast everyone's expectations. That is really important to keep in mind when you're trying to call a top or a bottom in markets. So oil, again, is sitting at a level of resistance. I wanted to pull up oil on the Edge Finder just to give a look. So I'm going to give you the answer of neutral on this because we're a bit mixed on the Edge Finder's output here. So when we look at some of the economic data, seasonally, potentially a bullish time for oil. Trend is recently flipped to the upside. If you went down like a 4-hour chart, it looks pretty bullish there, but we're at a level of resistance. PMI data is going to be important. Yesterday's or 2 days ago, the PMI data for manufacturing was a bit weak. That's bearish for oil. But with services PMI this morning, if PMI data beats expectations, that could be a bullish thing for oil. So we'll keep an eye on that. Retail sales were a bit upbeat. Basically, inflation for oil prices to go up, from a demand side, you want to see strong economies, growing economies, which will demand more energy and oil. Inflation-wise, inflation's coming down, which could be good for the rate cut story, but it's not a +2 like it used to be where we had high inflation. And, because high inflation, of course, for like commodities and things can create a float up in price. You got to think like just how, we were going to the grocery store and a carton of eggs was going up in price. Well, raw, commodities like oil copper, things like that, were also going up during that time. If we go take a look at oil during 2022, where we had some pretty crazy inflation, you can see what happened during that time. Oil just went up and up and up. But inflation's been on the fall down recently, which makes it a little trickier for me to sort of be super bullish on oil, right? If we start to see some strong jobs data and a reacceleration of inflation, then you probably got me on the line for some potential bullishness. But right now, I don't really see oil as a short-term trading opportunity to the long or short side. That being said, I do have a single position on ExxonMobil, which is an oil and gas company. I sold puts on it, and those are looking to close for probably 100% profit. What I mean by that, if you're not familiar with options, when I say 100% profit, what I mean by that is 100% of the max potential profit that I got from selling that option. I think it was about $300, which is not huge, but I sold puts on it. And Exxon at 112 was the put, so it is very unlikely to come all the way down to 112 by the expiration date. So I basically just will pocket the full premium. I think, like I said, I think it was around $300. So we'll see. So unemployment claims this morning came in largely as expected. So it didn't really cause much of a move. It hasn't updated in the Edge Finder, but it came in at 225. So basically right around as expected. So that was not a big catalyst for day traders or any short-term momentum here today, but it certainly matters still. Unemployment claims came in line, doesn't threaten the situation. ISM Services PMI is definitely the thing that I'm watching for the rest of today. That comes in at 10 a.m. about 45 minutes from now. We will have coverage all the way up to that point. NASDAQ still sitting at support. It's possible that we do see this thing take out the lows. If you get some weak PMI data, could take out the lows and head down to test this next region, which I'm long the NASDAQ, so it wouldn't be ideal. However, if you get the NASDAQ trading down into that range, I do have some cash on the sidelines. I'd potentially be looking to build bigger positions on some stuff.
So for 35 days, we've been stuck in this range. We've done nothing. What's actually... So the maximum move in the past 35 days has been 130 pips, which might sound like a lot to some people, but it's not really. So yeah, overall, not looking to trade this. The dollar is strengthening, so that is a positive really for dollar Swiss. But again, the Swiss could act quite well as a safe haven as well with the US dollar. So I think really there's better assets to trade than dollar Swiss at the moment. After looking at COT, I see price moving higher. Yeah, fair enough. However, would want price to retrace to the range midpoint. Yeah, I suppose in situations like this, when we've got a range, there's two ways you could really go about it. You can either wait for the breakout and the retest, which is how I would look at it, or if you are super confident that we're going to the upside, like you said, we could wait for a pull back into the range, whether it's halfway or to the bottom, and getting somewhere there. But because I'm more of a cautious trader, I like to see the full breakout to confirm, and then the retracement back in. I just use that as the break and retest essentially. Do you think euro dollar will bounce back to the upside? I'm very bearish on euro dollar. Let's see. Technically, maybe. And the reason I say that is because we've got quite a nice level through here on the weekly time frame. We are holding above we're holding above this 200 moving average quite well. We're seeing wicks to the downside, but of course we still need to pay attention to the market drivers. So for euro dollar, we've got the eurozone is struggling with weak economic with weak growth and inflation concerns, which are likely to force the ECB into further rate cuts. The USD, on the other hand, is expected to remain strong due to US economic outperformance and the Fed's rate cutting cycle, which is projected to end sooner than that of the ECB. This widening policy divergence between the Fed and the ECB makes Euro USD a solid short opportunity. So what I'll be looking for on Euro dollar really is a rejection of this level. Maybe NFP can come in positive, negative, push Euro dollar slightly higher, then we can get in and start looking to get for some shorts here. James, what piece of advice would you give your younger self when you first started learning fundamentals, knowing what you know now? That's a good question. I'm not sure, to be honest. There's a lot of things to learn. So you've got to understand not just what a rate cut is, but also how a rate cut affects other things. So with macroeconomics, it's not as simple as just saying, okay, well, this is happening, I'll buy. It's more a case of saying, okay, well, this is happening. What does that mean for this and that? And how will this go? And then matching that currency to something else. So it's just understanding that it's like a web or a jigsaw puzzle rather than just a linear line of information. Do you have a buy position with gold? I do, but don't follow that position. I'm likely going to close out after the stream because there's just no movement. James, what's your thoughts on pound yen? Pound yen looks technically good to the downside, but it's not something I'm willing to go into just because of the central banks. So we've got the daily, the daily that's sort of consolidating. Really, it's hanging around this level of resistance. Managed to break above but didn't hold. The weekly is also seeing wicks to the upside. The H4 not really doing too much, but yeah, it's a bit difficult. There's not enough factors for either the yen or the pound to make me go into this. Can I expect currencies like the euro and the CAD to be more bullish later down the line? Because the central banks are early and more aggressive when it comes to cutting rates? Not necessarily. It depends on future data as well. It's not all dependent on just when the central bank's cutting. There's a big driver, but it's not the only thing.
I'm just kind of like a perma bear on the euro, kind of. Like it's really hard for me to get bullish on the euro because, anyways, maybe I'm letting my bias in a little bit, but I feel like that's the place of regulation, restriction, and less capitalism. So when it comes to places that are more capitalistic, like Malaysia, Singapore, United States, Japan, Australia, I like those places more. So
yeah, no, fair enough.
It's a little bit of bias, but I not to say that the euro has no innovation whatsoever, but definitely, they're good with cars. That's for sure.
Oh, well, yeah. I mean, yeah, the US, to be honest, I think just always will outperform the euro in the long term.
It's definitely been the case for a very long time. We got PMI data here. I'm just going to switch over my screen just so we can watch the reaction together. Let's see. So we got services PMI numbers coming out here in about 30 seconds. For everybody watching here, we've got a couple different charts all on the same screen, just for your convenience. You got silver and gold over here, the dollars right here, oil, NASDAQ, S&P, Dow Jones, and Russell. We can roll our breaking news really quick. Got about 4 seconds to go. Let's see what we got. All right, PMI numbers should be coming out momentarily. Oh, baby. 54.9. Telling you that the services sector does not see as much slowdown as perhaps previously forecasted. I'm going to go ahead and say I think that's bullish for stocks in general, bullish for just generally speaking economic outlook. We'll see, some areas are not going to like that because that could push off rate cuts, but I'm in the camp personally, James, where I don't want to see rate cuts quickly. I want to see the economy hold up and then slow rate cuts, which is the soft landing ideal scenario in my opinion. Nasdaq's up here on the day now, or actually very close. We're break even. We were down at one point, almost 1% on the day. Nasdaq's pushing back. There you go. Nas flat on the day. Dow Jones still lagging today, down 0.6%. Small caps down 0.7 or so. So a bit of a reaction here. And gold, of course, not loving that reaction, of course, because that is stronger than anticipated economic readings. That's going to be a little bit less attractive for the gold side of things. James, what are your thoughts on all this?
Yeah, very similar to you. I'm quite happy to see the US data start lifting up a little bit. I think the US took a bit of a hit when we had the 50 basis point cut. So to see the dollar start picking up again, I think is a great sign. So yeah, I think we're going to see this bullish momentum continue as we start to see a little bit more hope from investors come into the markets. So yeah, the next stop really in my book would be sort of around 102. I think is the next stop. 102.68. I think.
I actually like your semi-contrarian trade on euro dollar, especially now after this, because okay, we've got the dollar making a push higher here. We were sitting at resistance going into services PMI, and fair warning to everyone, we've got NFP tomorrow, which could completely change the story. But operating on what we have in front of us today, that's a good figure for the dollar. Following a couple figures that were good for the dollar this week. This week, we've had JOLTS job opening showing some appetite for hiring. We've seen ADP numbers came out higher than expected, more strength on the job side. And then you've got, of course, today's services PMI, which to me was one of the most important figures of the week. It tells you what purchasing managers and the services component of the U.S. economy, which is the bulk of the U.S. economy and U.K. economy, we're a services-based economy. And so their appetite is strong. So you're seeing potentially signs of a stronger than anticipated U.S. economy. Go figure. That's been the theme for the last few years. U.S. economy continues to shrug off doubters over and over. So maybe the contrarian trade for a little bit of time here, James, is maybe some bullishness on the dollar, and maybe stocks continue to party on.
Yeah, no, absolutely. Definitely interesting to see what happens over the next couple of weeks, especially into next month.
Yeah, for sure.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.